Welcome to our podcast series, Talking with Traders, hosted by expert trader Garth McKenzie in London, from where he's interviewing various guests on the topic of trading.
Welcome back to another season of Talking with Traders with me, Garth McKenzie. This is the 6th season of the podcast, and we're into our 3rd year since the podcast began in 2020. Once again, IG have come on board as sponsor and agreed to fund this podcast for another season. We really are privileged to have such a global leader in CFDs trading as our podcast sponsor. Over the coming weeks, I'll be interviewing various guests from around the globe to bring you their market insights. I'll be digging in to find out what makes them tick, how they see the markets in the year ahead, and what techniques they will use to succeed in the markets. Some of the guests will be returning guests from previous seasons, and some will be new guests that I've managed to convince to join me to give up their time and share their insights. As we enter 2023, there's as much uncertainty as ever around where the markets may be headed in the next 12 months. We've just come off a horrid year for investors in 2022, where a typical 60-40 portfolio delivered its worst annual return in several decades. But what of 2023? Will the US lead the world into a global recession, or will the central banks manage to achieve a soft landing for the global economy? Will inflation come under control as base effects kick in and supply bottlenecks open up? Will US earnings hold up in the face of a weak economy, or will they disappoint? Will we see continued weakness in the US dollar? I'll be asking these and many other questions to my guests in the coming weeks. The idea behind these podcasts is for you to get a variety of views from a broad spectrum of market professionals. None of this is intended to be seen as financial advice, but it is intended to get you thinking and to weigh up what possible paths the market may follow in the year ahead. Please remember to subscribe to this podcast in your favorite podcast app. That way you'll be notified of upcoming episodes as they get released. Once again, thanks to IG for sponsoring this podcast for a 3rd consecutive year. Thanks for joining me, and please enjoy Season 6 of Talking with Traders. Welcome back to another episode of Talking with Traders. And this week we've got something a bit different. We're going to be talking about carbon credits, carbon allowances. And my guest is called James Heal. He's based in London, and he is the CIO at Transition Net Zero Advisors. James, welcome to the podcast.
Yeah, hi Garth. Good to be here.
Yeah, thanks very much. It's good to have you on. As I always do with new guests, James, just before we get into this topic, which I think is a very, very interesting topic, talking about carbon allowances and carbon credits, I always just like to get a little bit of a background into the guest. So if you could tell the listeners a little bit about yourself, just in like a minute or two, a brief background, and then we'll get into the nitty gritty of what we're going to chat about today.
Yeah, sure. So I spent about 30 years working for a number of investment banks and fund management companies. I spent most of my career investing in technology companies, and then sort of more latterly over the last 10 years, combined that with investing in energy amongst various other sectors. And I guess I came to the realization about 5-7 years ago that the answer to the current climate crisis and the energy transition lay in technology. And so, having sort of hit that road to Damascus moment, I decided I'd try and set up my own shop again. So I'm currently the founder and CIO of a startup hedge fund that invests primarily in equities that have technologies that enable the energy transition and carbon allowances and carbon credits.
Yeah. Okay. I know from the chat that we had before this off air, you've got a vast knowledge of all of the various new renewable energy components in this transition to a net zero world. Obviously, for this podcast, we decided we're going to keep it to discussing carbon allowances and carbon credits. I'd love to get you back onto the podcast to discuss more issues at a later stage, things like electrification and electric vehicles and the components that go into that, and lithium, etc. But I think for the purposes of this podcast, we're going to stick to the carbon credits and the carbon allowances, because it's something we've not discussed on this podcast before, and it's something very, very interesting. I've had to have a little bit of a crash course in it after chatting to you briefly before but when we were setting this up. I've subsequently watched a bunch of YouTube videos and gotten to try and get my head around what these are. But for the listeners who are uninitiated, can you give us a bit of a background into what a carbon credit is, or what a carbon allowance is, and how did they come to being? Why did they exist?
Yeah, that's a whole set of good questions. I mean, I think it's worth taking a little bit of a step backwards, because I mean, the reason I invest in these carbon assets is because I think it's an emerging asset class.
Yeah.
It's not particularly well understood by most market participants. And carbon or greenhouse gas emissions. And so through this conversation, I think we should use those terms as interchangeable. So
Right.
greenhouse gas emissions being carbon and methane and various other sort of pollutants.
Yeah.
But most participants in the economy have never paid a price for the carbon that they emit into the atmosphere. And you started to see over the last almost 20 years, governments are beginning to attach a price to carbon. So either directly penalizing emitters or creating incentives for companies and organizations to remove carbon directly out of the atmosphere.
Right. I mean, this is obviously important because it's all about climate change, and the fact that through these greenhouse gas emissions, we're effectively heating up the environment, and that poses massive environmental risks, right? So it's almost like an existential threat for us as a human species on the planet, if we want to really stretch it a bit. But hence the need to try and really get on top of this, get on top of greenhouse gas emissions and CO2 emissions. Yeah.
Yeah, no, absolutely. And so if you go back to the Paris Agreement on climate change, then they set a binding agreement to restrict global temperature rises to a maximum of 2 degrees above pre-industrial levels.
Yeah.
And the mechanism for doing that is controlling the amount of greenhouse gas emissions that go into the atmosphere. And so your point here, so they're called greenhouse gases because they act like these emissions act like a greenhouse and trap heat into the atmosphere.
Okay.
And I'm simply the biggest sources of greenhouse gas emissions are transportation and agriculture.
Yeah.
Agriculture principally being methane.
Yes.
And so. Governments and organizations are now setting aside policies to restrict the amount of greenhouse gas emissions, and heading to this concept of net zero is no increase in the amount of greenhouse gas emissions going into the atmosphere on an annual basis. And so this has then resulted into the formation of two types of assets, carbon assets. So you have carbon credits on one side, and then you've got carbon allowances on the other. And it's important to distinguish between those.
Okay.
I mean, again, I think the other definitional point that's worth bearing in mind is each one of these allowances or credits is associated with 1 ton of greenhouse gas emissions.
Right.
So that's the sort of the unit of measurement.
Okay.
And so if you think about carbon credits, and perhaps we'll deal with that one first, because it's they're basically a financial instrument that allows individuals or companies to offset their carbon footprint by investing directly in projects that reduce or remove greenhouse gas emissions out of the atmosphere.
Right.
And so as an example, I mean, if you go onto the, we're based here in the UK, but so if you go onto the BA website and book a flight, then, before you get to checkout, it will ask you if you want to offset your carbon footprint, which will be about, sort of 2 units for a transatlantic flight, for example.
So, It's so interesting that you just mentioned BA, and that's unprompted by me, because when I was preparing for this, I thought, let me go and try and put this into a context that a listener would understand. I mean, what does the greenhouse gas emissions look like? How can we put this into terms that listeners might understand? So I got these examples. I thought a flight from London to Paris one way, typically, and this is obviously an average with an average aeroplane, and assuming the aeroplane's full, I suppose, each individual passenger effectively is emitting 122 kilograms per passenger, right, on a flight like that. A flight from London to Dubai, 860 kilograms of CO2 emissions, and a flight from London to Johannesburg, where I'm from and where I fly back to from time to time, one way, 1.4 tons of CO2 emissions. So that kind of put it into context for me, just the amount of CO2 emissions that we're talking about here. And British Airways, when I looked it up, as you said, they emit, according to Wikipedia, if we can believe it, is 18.4 million tons of CO2 per year.
Yeah,
was the latest number, right? So, I mean, this is what we're talking about. Now, you said that the carbon allowances and carbon credits are priced per ton.
Yeah.
What is the typical price of a ton of CO2 now?
Well, that's a very complex question, but if you go back to that carbon credit element, I mean, I'll answer the question.
Yeah.
Then they come into existence because, let's say you or I decide over a large lunch we're going to plant a forest.
Yes.
And having decided to do that, then we can issue carbon credits associated with the amount of carbon that forest will extract out of the atmosphere over a period of time.
Okay.
And we will issue those carbon credits to buyers, and they are typically either companies or individuals who want to offset their organization's carbon footprint. And the price of those, I mean, it's highly variable because it depends on the quality of the asset. But range from anywhere between $1 a ton to $20 a ton.
Okay.
And I mean, I would exercise a huge degree of caution in this particular area because it is pricing is extremely opaque.
Yeah. And
the auditing of the carbon absorbed by these schemes is highly variable from scheme to scheme.
Right.
But you do have a number of organizations that have coming into existence. So the schemes called Vera and Gold that do a very good job in terms of trying to regulate and audit the quality of those carbon assets. And then you have a number of exchanges springing up around the world where you can go onto those exchanges and actually buy those carbon credits should you wish.
Yeah.
But I would caution that actually the audit and regulation of that market is nascent.
Right.
And will develop over time. But
yes.
so hence that widespread of 1 to 20.
Okay, but I mean the carbon allowances that are traded, because and this is what the kind of topic is about, and where we're wanting to go with this is the things that are actually tradable. There are futures, carbon credit or carbon allowance futures tradable on exchange. There are exchange traded funds, effectively, are they ETFs, or is it an ETN?
There are a number of ETCs
ETCs, yeah,
and ETFs out there, yeah,
yeah,
as
yeah.
well.
And
And these are, I mean, before we do that, it's possibly worth talking about. So we talked about these nature-based solutions, which are carbon credits, and let's sort of
yes,
park that to one side for the time being.
fair enough. Yeah.
You then had the other development around carbon allowances.
Okay.
And these are basically government-sponsored schemes, of which the biggest and the oldest is in the European Union,
Right.
and it's something called the EU ETS. ETS standing for Emissions Trading System.
Okay.
And this is an attempt by governments to basically give permits or allowances for industries or companies in industries
Right.
to emit carbon into the atmosphere.
Okay.
And the scheme was first introduced in 2005. And has been through a number of various iterations since then.
Okay.
And is is an extremely large and liquid market.
Yes.
So I think there's about 500 million tons of traded carbon allowances on top of another 500 million tons or so of issued carbon allowances.
Okay.
So roughly there's roughly a billion carbon allowances issued by the EU. The number's slightly lower than that this year.
Okay.
It's around 8 to 900 million.
Okay. So a billion carbon allowances, is that a billion tons?
So that would equate to a billion tons of carbon.
Okay, per year.
Per year, and so if you think about that in the global context, I mean, the world emits something like 58 billion tons of greenhouse gas emissions a year.
Yes.
The EU emits about 4 billion tons.
Okay.
It's actually a bit lower than that now. It's about 3.5 billion tons of carbon emissions a year.
Okay. Okay. And so now the EU then, because they're the regulatory body, right? Well, I presume that issues these allowances.
Yeah.
And from what I understood it when I read about it, I think there's about 11,000 companies in the Eurozone that participate in this scheme. So those 1 billion tons of carbon allowances are then divvied up amongst those 11,000 odd emitters, right? So they're each, and I guess each one, depending on the industry that they operate in, are allowed X number of tons. I mean, if you're an airline, or if you're a steel plant or a power, coal-fired power station or whatever, these are all the big offenders in terms of emitters, but some are more emit more than others. So I guess the rules then are that each of these businesses in their various industries are allocated a certain number of tons that they're allowed to emit up to a maximum, right? Am I correct in my understanding?
Yeah,
right.
No, and that's absolutely spot on. And the industries covered are predominantly the heavy emitters. So these are the power generation utilities in the EU. They're steel and cement. The latest iteration of the scheme brought airlines into it as well.
Yes.
But effectively covers 40% of the EU emissions.
Okay. Now, in terms of understanding where the trade in these allowances and these carbon credits comes into play, I guess without taking the thunder away from what you're going to say, I suppose, but I'm just trying to think in terms of understanding here. These emitters are allowed to emit a certain number of tons per year of CO2, of greenhouse gases, right? If they go above that, they are penalized.
So if they go above that, they are either fined,
right,
at the cost of €100 a ton currently,
right, okay,
or they can go into the market and buy surplus emissions from companies that aren't using their allocation.
Okay. All right.
Or,
So
or they can go down the route of investing in decarbonization technologies
yes.
to reduce their emissions.
Okay, so if I'm understanding it right, let's just think of an example here. So maybe you've got an airline like a British Airways, right? They're an emitter.
Let's do it with the utility, because airlines have only just been introduced into the scheme,
All right.
and actually they're really complex. It's really complex to think about the airline element.
Okay, so let's then look at a utility like an electricity generator. Yeah. They burn fossil fuels to generate electricity.
Correct.
But we're also seeing a lot of electricity producers starting to move more and more towards green energy, so solar and wind, etc. Now, if they're able to reduce the amount of fossil fuel that they're burning and replace that energy generation with solar and wind energy, I guess it could come out that in the end of a year, they have emitted less carbon into the atmosphere than what their allowance would have been. And is that what then gives them the credit that they can effectively sell on to other emitters?
And not quite, because this is done on a plant-by-plant basis.
Okay.
And is rigorously audited by the EU. So if you have a coal-fired power station,
right,
and you are going to emit 100 tons of CO2 this year, or that's what you emitted last year,
yeah,
you will be given an allowance to cover a certain element of that.
Okay.
And the interesting dynamic about this EU scheme is the number of available allowances issued every year is on a falling trajectory.
Right.
And so for the next couple of years, I think it's falling by about at a rate of about 4.2% per annum.
Okay.
And so if you're going to emit 100 tons this year, and that's the allowance you were given, next year your allowance will only cover 96 tons.
Right. Okay. So that's where they're effectively enforcing or trying to force these emitters to emit less, to be more environmentally responsible.
Correct. And that is on a sort of site-by-site basis.
Yeah.
And so it incentivizes companies to either reduce emissions by changing the product mix, or to put in decarbonization technologies, or pay a fine.
Yeah. Okay.
Or go into the market and actually buy an incremental carbon allowance that enables you to emit more.
Okay. And that's really what the crux of this discussion is about, is that thing that you can go into the market to buy that allows you to emit more. That's the carbon allowance.
Yes.
That you can go into the market and buy. So just to continue with our example, you've got the electricity generating utility on the one side that's now doing solar and wind energy, and they're emitting less than what they effectively were allowed to emit in a year. But then on the other hand, perhaps you've got a steel plant that's burning furnaces like crazy, and they're emitting more CO2 into the atmosphere than what they were allowed to. So they would then go along and, instead of taking a fine, which is, as you said, 100 euros per ton of emissions into the atmosphere, they could go and buy the allowances that therefore that will then, I guess, prevent them from getting that fine.
Yes, correct. And so if you think about the way the market's structured, so roughly half of the allowances are issued for free to the emitters.
Yes.
Which gives them a base sort of base coverage.
Right.
And if you are on that path of decarbonizing your production process faster, then you end up with surplus allowances that you can go on and sell into the market to somebody else who isn't on that journey.
Okay. So an example of this that some of the listeners might be familiar with is Tesla. That's a company that has in the past been accused of making all their profits out of selling credits and not making profits out of selling cars. And be that as it may. But that's an interesting setup because they are obviously seen as the greener party in all of this. So they can then go and sell those credits to the likes of power generators or steel producers or whoever decides that they need to buy them in order to hedge themselves against the fines that they would otherwise get for emitting.
Yeah, and if my memory serves me correct, I think Tesla sold their surplus credits to Fiat at a price of something like $500 a quarter. So,
okay.
so it's a big number.
Yeah.
And I think the motivation from the EU to set up this scheme was, one, to reduce carbon emissions, and they're currently, versus the I can't remember the year of the benchmark, but call it 2000. And the new version of the scheme is to reduce emissions by 63% from that baseline number, and so. By attaching a price to carbon, which is in effect what they're doing, they're incentivizing companies to decarbonize at a faster pace.
Yes.
And for a second, when I put my equity hat on, then I think understanding the pricing of carbon and who the winners and losers in that are is actually will become a key source of alpha generation going forward. But we can talk about this about that next time around. I think for the purpose of this conversation is as an investor, as a trader, I think you've got a highly liquid asset now. That is, so if you look at the EU market, it trades something like 700 billion euros worth a year.
Right. Okay. Gosh.
So it's highly liquid, and you've got a market construct where, because of economic growth, effectively demand for carbon allowances is going up, and because of the way the EU have structured the market, the supply of carbon allowances is going down at a rate of just over 4% per annum.
Yeah.
So you've got an element of rising demand for these carbon allowances and falling supply.
Yeah. Okay. And I mean, over the years since these things have been in existence, the price, I've noticed, has gradually had a general upward trajectory.
Yeah, I mean, it's so the price quoted in Europe today is around 85 euros a ton.
Yeah.
Okay. Having I mean, over the last 2 or 3 years has gone up from 20 euros a ton over that period. There was a period. So when the scheme was introduced in 2005. It's worth bearing this in mind. The price of carbon allowances effectively went to zero in 2008. And that was mainly because economic activity in the EU collapsed because of the GFC.
Right.
And the market was just flooded with surplus allowances.
Yeah.
So from that period, the EU re-engineered the scheme to create a market stability reserve in which they could take out excess allowances every year and hold them effectively in treasury, and or release them at future periods and or cancel them.
Okay. We saw an interesting sort of dip in the price of these carbon allowances as well during the COVID period. I saw on the chart. Obviously, that also due to far less economic activity, and therefore, I suppose, far less demand for them because the emitters and industry is in general also ground to a halt for a large part.
Yeah, I mean, there is clearly a degree of economic sensitivity in here.
Yes.
And then obviously over the last year, 18 months, as the Russia-Ukraine conflict has unfolded and gas supply into Europe became quite scarce, then that forced a lot of the power utilities to generate more power out of coal.
Yeah.
And coal emits about twice as much CO2 per unit of energy as a combined cycle gas power station does.
Right.
And so so you saw the reverse happen under those particular circumstances. So when you look at this market, I mean, you've got to think about a number of things. economic activity being one of them,
Yeah.
the relative price between coal and gas being another.
Yeah.
And then, I think the third thing you need to think about, and this is the one I spend most time worrying about because I've no idea how to answer the question, is politics.
Yeah.
This scheme was drawn up in Brussels by some great European politicians, and politicians do crazy things every now and again, and so you could wake up on a Monday morning and find they've cancelled the scheme. So
Okay.
yeah,
Unlikely, I would imagine, though, because it's
I mean, highly unlikely
yeah.
given
And-
a trajectory and commitments to the Paris Accord and various other bits and pieces.
yeah.
But that's for me, that's the big right tail risk that one's taking
Yeah.
on when
Yeah.
looking at this particular market.
Sure. I guess I'm just thinking aloud now. I mean, I guess another political risk or area where the politics could come into it and could throw a cat amongst the pigeons in this market is if they decided to raise the fine for emitting, so from 100 euros to whatever, 120, 150. Does that would that in itself be a sudden kicker to the value of these carbon allowances?
Yeah, no, I mean, absolutely. But I'm not 100% sure of the answer to this question, but I think that fine is incremental to the cost of the to an incremental allowance.
Okay.
So it's not pay the fine, but you don't have to buy the incremental allowance. I think you have to do both.
Okay.
Yeah.
All right.
But also bear in mind, I mean, this is a big revenue generating scheme for the EU.
Yeah.
I think the EU last year generated over 30 billion euros of revenues out of this scheme.
Okay.
Which is then passed on to the various member states, of which they are obliged to spend half of that revenue on energy and climate initiatives.
Yeah, because that's it. I mean, this is where obviously the economic interest needs to meet the environmental intention of this whole scheme.
Yeah.
So
correct.
yeah, that would make sense. Just going back to the carbon allowances that you said are currently trading at around about 85 euros per ton.
Yeah.
Where does one trade these?
So they are traded on the futures exchange.
Okay.
So it's predominantly a futures contract. And then there are a number of ETFs and or an ETC where one can trade the physical of them.
Okay.
So I mean, I think we're allowed to talk about this because this podcast is sponsored by IG. But I hold my futures carbon emissions assets through the IG index.
Right.
And if you go into the IG search button, it sort of search carbon emissions, and it comes up with the contract.
I've done that. I've done it on my IG because I mean I also obviously trade through IG, and this you're quite right. This podcast is indeed sponsored by IG Markets. And yeah, I mean I also went along and had a look, and there is the product there. The one I looked at was the Spark Charge ETC, which is it's London listed, right?
Yeah.
And this code is CO2, which is quite an appropriate share code for that thing. And it's available. It's there to trade. So you can trade these as a retail investor, as a retail trader.
Yes. And so Spark Change is a relatively new organization. I mean, I came across them about 4 or 5 years ago, and they've basically converted the futures contract into a physical contract. So that Spark Chain physical carbon is effectively a listed equity.
Okay.
And they claim it's cheaper to own the physical equity than the futures because you don't pay for the roll in December when the futures the underlying futures expire.
Yeah. Do the futures themselves only expire in December of each year? So there's only one expiry per year?
As far as I'm aware.
Okay. All right.
And then there were it is worth saying, I mean, there were a number of other schemes like this around the world. So there's a similar scheme in California. There's a scheme on the East Coast US called Reggie.
Okay.
New Zealand has a carbon trading scheme, which is very similar to the EU one.
Okay.
And I mean, the UK now has one, having post Brexit,
Okay.
and then the various other government schemes appearing around the world. I think South
Yeah.
Korea, China have just pulled together all of their regional schemes into a
Mm,
national scheme.
mm,
Most of those are materially less liquid.
yeah.
But if you look at, Crane shares, for example, I'm one of the large ETF providers.
Yes.
They have a number of ETF related around California or Reggie in the US,
Okay.
and a couple of combined global ones.
Okay. All right. So there's a lot of these things available
Yeah,
around the world to trade, but the one that you focused on obviously is the European one, which we spoke about. And that is the oldest market, as you've said, and it's the most developed market for trading these carbon allowances.
yeah,
One thing I did notice when I was doing my research is that it seems to be a product that's very much developed world product. And all of those geographies that you've just mentioned are predominantly developed countries.
yeah.
And when you look on the map, you see that there's nothing like this in India. There's nothing like this in Africa.
Yeah.
And I mean, India is obviously a big emitter as well. Africa, to a lesser extent, I guess, because the economic activity there is a lot less than in the developed world. But I mean, if I think back to my home country, South Africa, there are a couple of big emitters there. Eskom, the national power utility, being a big one, which operates a lot of coal-fired power stations. Although lately with load shedding, I don't think that they're emitting too much. Half of the stations don't seem to work.
Yeah.
Be that as it may. And then there's another one is Sasol. Sasol's the big oil company in South Africa, is also a huge emitter. So I guess it's encouraging to see that the developed world is picking this up and taking it forward, and there are economic incentives for companies to try and be more green in the way that they operate and to emit less of these CO2 emissions into the environment. But I guess from a planet's perspective, we want these types of schemes to be all over the world. We want businesses to be incentivized throughout the globe, not just in the developed world.
Yeah, I think so. From a philosophical point of view, I'm the world that doesn't care where a ton of carbon comes from, or where it's sequestrated to, right? It goes into the atmosphere and it stays there. But clearly, the developed world has been responsible historically for most of the greenhouse gas emissions.
Yeah, I guess so. They've been the most economically active, so I suppose that makes sense.
And philosophically, it's only fair and reasonable that the emitter should pay the majority of the price.
Yes.
And if at the same time, this is one of the underpins to my equity thought process, is by attaching a price to carbon and forcing companies to decarbonize, you're also forcing them, or to develop technologies that enable decarbonization, and whether that's wind or solar or nuclear, or whether it's direct air carbon capture schemes or whatever. I don't think it really matters. But actually, I think it creates an economic incentive to develop those decarbonization technologies, which should be beneficial for all. For me, the interesting one is China, because they clearly have been on that development path, taken a lot of people out of economic poverty as they've been through the journey, burnt a lot of coal in the meantime, but actually are also at the forefront of solar development. They got very rapidly developing wind businesses. I think their power systems are rapidly decarbonizing, but they've also put in place a national carbon trading scheme.
Yeah. Okay. Well, that's good news.
Yeah.
I'm just thinking hypothetically here now with my financial trader's hat on. These products, these carbon allowances, are freely tradable in the market. So as are any futures contract. I mean, I can go and trade maize futures, for example, even though I've got no interest in ever taking delivery of a ton of maize. And similarly, I can go and trade these carbon allowances purely for speculative purposes or investment purposes. not ever, not that I'm an emitter, not in any great scale, let's say. Where I'm leading with this question is that if financial participants start to get involved in this for speculative purposes, does it run the risk that the whole thing gets crowded out by the financial participants? In other words, could a hedge fund or a big participant come along and corner the market for these carbon allowances? Is that possible?
I'm clearly, in theory, yes, right?
Okay. Is it too big? I mean, is the market too big for that?
Well, I'm financial players today, from the last data I saw, were around between 10 and 15% of the market.
Okay.
And I mean, interestingly, the regulator's view of financial players is if a financial investor owns a carbon allowance, it means an emitting utility can't.
Right.
And that is good news.
So you're effectively removing a carbon allowance out of the free float.
Correct.
Okay.
And so actually, I'm yes, one's clearly doing an element of why one's doing it is to generate a financial return. But actually, by doing it, you're also, in theory, accelerating the decarbonisation journey.
Yes.
Now, I'm the size of the market. I mean, clearly, if an extremely large investor decided to try and corner this market, I think you need to be spending a couple of $100 billion to do so.
Right. So it's proper money to do it.
It's certainly bigger than my fund. So,
but I mean, I'm just thinking now, is there, I guess, let's just say hypothetically that were to happen, that the price was pushed up and up and up. What that then means is that, okay, it's more expensive for an emitter to buy the protection. Yeah. But I suppose also is it governed by the amount of the fine as well, to some extent?
Well, I think what then would happen is this market stability reserve. So these allowances that are held in Treasury will actually get released back into the market.
Okay.
And there is a strict pricing formula that dictates as and when those Treasury emissions allowances can be released.
Okay.
I mean, it requires quite a high carbon allowance price over an extended period of time, at something like 6 months.
Right. And
a 75% increase in the average price of the allowance over that 6-month period for that release mechanism to kick back in.
Okay.
So this market stability reserve is actually, as well as giving a degree of protection on the downside, is deliberately designed to stop those spiking prices.
Right. Okay.
And if you go back to the sort of Russia-Ukraine gas situation, then there was certainly some very vocal voices, particularly from Poland, who rely very heavily on coal-fired power generation to try and limit the price of the carbon allowance, because they felt it was being distorted because they were forced to burn coal because they couldn't get access to gas, but also potentially because of the sort of financial speculators. And actually, the EU did quite a lot of detailed work at that point in time to try and work out what the exact role of financial speculators in the market was, and they decided there wasn't much to be seen.
Okay. All right. Interesting. But as you say, it's not very widely known yet. So perhaps that comes at a later stage where you get more and more involvement from outside players who are not necessarily there for the right reasons.
Yeah.
You mentioned that there are a declining number of allowances each year, something like -4% each year, and that are released. So, and you also made the point that introduces an element of natural scarcity, but at the same time, you've got demand. So it's quite interesting, because that surely in itself then must mean that there's a natural upward bias to the price for these allowances over time.
Yeah, I mean that's part of my thesis around this is
Yeah.
that you've got a falling rate of supply that's relatively predictable, so 4.3% per annum decline between 2024 and 27, and
Right.
then 4.4% per annum from 2028 onwards.
Mm.
And the entire mechanism of the carbon price is to create an incentive to decarbonize.
Mm.
And I think the way you should think about it is, as you know, the emissions that get taken out today are sort of the low hanging fruit.
Right.
I, if it's going to only cost me $50 to take out a ton of carbon out of my manufacturing process, I'll invest in the technology to do that rather than spend 85 euros on the allowance.
Yes.
So I do those easy bits, but then obviously as you go into next year, well, you've taken out the easier bits, and now you've got then the slightly harder bits to do.
Right.
So as the number of allowances shrinks in the market, what you end up left with is a smaller number, but of harder to decarbonize units.
Yeah.
And because
Okay.
they're harder to decarbonize, the relative cost should therefore be going up as well.
Yeah. Yeah.
So I think it's a combination of those two factors:
Yes.
falling supply, rising demand, and a rising cost curve of decarbonization over time.
Yeah. Okay. So you're bullish.
Yeah, I mean, I think it's I think the market construct here, I mean, politics aside, I think the EU now has almost a 20-year track record of being able to prove that this scheme works by attaching a price to carbon, penalizing emitters, forcing investment in decarbonisation technology, reducing the low-hanging fruit, and we're left with harder hanging fruits to go and tackle going forward.
Yeah.
And on my strategy on carbon is a buy and hold one by and large, but
Right.
I think the price of carbon is materially higher in 5 years' time than it is today.
Mm.
I'm the forecasts out there of around, sort of 150 euros a ton in a couple of years' time. There were some outliers well above that at around 400 euros a ton.
Okay.
My own personal view is I think it's somewhere between the two.
Yeah. Okay. And it's 85 euros a ton at the moment. So even if it
Yeah,
gets to the bottom of that range, 150 euros a ton in 5 years, that's a pretty decent return.
yeah.
And if it's higher than that, it could be a phenomenal return. Very interesting.
Mm.
All right, we're getting towards the end of our allotted time for this recording, James. Second last thing, where can listeners learn more about carbon allowances? I mean, look, I can say that I've had a crash course in it from speaking to you and also from watching a whole bunch of YouTube videos, which there are some very interesting YouTube videos out there, I must say. But where else?
I mean, the first place I would start was actually go to the EU website. And so if you go to, I think it's www.climate.ec.europe.eu,
Yeah.
then that takes you to basically the summary page of how the EU ETS is constructed. And it goes through in some pretty dry terms. I think most of the things you need to know to understand, particularly things like the market stability reserve mechanism, and that's sort of how government programs like Fit for 55 fit into the system.
Yeah.
So that would be the first place I would go.
Okay.
I mean, I give a plug to somebody else if I may, but there is a carbon fund in London,
Yes.
called Carbon Cap.
Okay.
And the only thing these guys do is actually is invested in carbon markets around the world.
Okay.
And they actually have a pretty good library of some of their historic research notes, which are
Okay.
which are well worth a read.
Yeah. Okay. Interesting.
That's not a plug for the fund because I've no idea how well Mike is doing, but I think but it's
but
he's
it's
in the
there.
right place. Yeah, it's
Yeah.
there.
Okay. And of course, if you're a retail trader and you're wanting to participate in this, has interested you, you can go onto your platform, and be it IG Markets or another one, and look for that CO2 fund that's listed in London, the Spark Charge ETC, which is effectively a fund that mimics the performance of these carbon allowances. All right, excellent. And lastly, James, how can listeners follow your work or get in touch with you if they're interested in this, or if they decide they want to invest in your fund?
Sure. Yeah. So we're a relatively new fund. So we are fundraising. We're always open to people to give us new money. So you can find me at netzeroadvisors.co.uk.
Okay.
Or you can find me on Twitter at JDS Heal, or on LinkedIn as James Heal.
James Heal.
Yeah.
Oh, fantastic. All right, super, James. Well, it's really been a pleasure speaking to you. I've thoroughly enjoyed this. I've got a lot more questions that I could ask, but obviously we're governed by time on these podcasts. But it's a very, very interesting topic, and this is a very different podcast to anything I've recorded before. So I hope the listeners will enjoy it. I've certainly found it very, very interesting, and it's sent me down a bit of a rabbit hole of wanting to learn more about this. And as I said at the beginning of the podcast, it'd be nice to get you back to talk about some of your other areas of expertise, talking about electrification and other aspects of green energy and the green energy transition going forward.
Great. Pleasure, Garth.
Thanks very much. Cheers. Thanks for joining us for today's episode of Talking with Traders, brought to you by IG, a world-leading CFD provider. We really are privileged to have such a leader in the field of online trading involved in this series. Please follow us on Facebook and engage with us there. And a reminder to make sure you subscribe to this series by clicking on the subscribe button on your favorite podcast app. If you've enjoyed this podcast, we'd also appreciate if you'd leave a review on the app too. Till next time.